Hello and welcome again at Stocks Advisors channel. Here at our channel, we are looking for interesting buy opportunities for US-based stocks. This episode about Northern Genesis Acquisition Corporation traded at New York Stock Exchange, ticker name NGA. Well, NGA today also, as at the previous stock we analyzed today, GNOG, was showing almost kind of a flying dragon candle, meaning that it's a very big downward shadow with almost no body, slightly negative body, and a little bit of upward shadow. What does it mean? In general, it means that at the beginning of the day, of course, there was a big sell-off. Also, you could see the volume was a bit higher than usual, and then at the end of the session, especially closer to the weekend, meaning that the foreseeing for the next week is still positive, bulls were able to prevail and almost to make it a draw in the price. And if you look in general how we are trading after hours according to Yahoo Finance information, you see that actually it's with plus 1% half hour after the trading session was closed. Still could be, of course, coming back to the zero, could be within volatility, but for the daily trade of minus 3%, having plus 1 after hours is very good. And again, it's very important to remember here, this is a sub-billion company, so it's a company with a market capitalization of about 640 millions, and of so-called sub-billion companies are keen for very strong volatility. So you could observe big volatilities, and indeed that's exactly we see for the last couple of months in price action for this company. If you look by beginning of November, actually by middle of November, the very huge wave started upwards, and we went from to the level above 35, so more than 3.5 times growth within 2 months. This is incredible for any ticker in the market, of course. And as always, after this, you have very strong correction taking place. And what do we have here is very interesting, because we are now in upcoming very strong support levels, and also it's a secondary decline, which means that soon there should be a nice reversal. So let's analysis here. As always, before we start at our daily charts, we have 3 moving averages depicted. Well, in this case, only 2. These are moving averages 20 and 50, the blue and green line. The red one we don't have yet because still not enough time to conclude on that. So we will just erase it from here. And what do we see if we look at those moving averages? First of all, we can see that after decline started by mid of January, there is a very strong kind of a top ceiling form that the decline. Actually, it started a bit lower here. So this is the line, let's call it R1, and it followed it followed moving average 20, the green line, which usually works as a very strong resist level. It is now, but what happened here is very interesting. Because it's simultaneously resist and an attractor. So when we had by mid of February this big decline in the price from that level, so when we pierced moving average 50 and went all the way to 18 here, so we suddenly make very big spike and then another decline. So it's a secondary decline already, and secondary decline with this flying dragon almost candle. So these secondary declines are usually very bullish momentum. It means that you could make very nice profit just on a quick trade, because one will be a strong attractor, so the price will be most probably attract there. We'll see it be pierced, or we will go to the third level of decline. It's still a question, so we will now discuss how to play on this, but still we can make a quick profit up to 10-15% even under this first attraction or attractor movement towards R1. So how to do it now? First of all, what we need to do, it's an immediate buy already, because you can see we are sitting in the very nice, actually support level, which is between 7 and just than 16. So this, let's write it here in numbers. So this would be the first entry and the immediate buy in the current, let's say, price action. So this would be the level of 1590 to 17. So within this price, you can make the first entry. Slowly you can enter with this first channel. Why is this? Because it's just making a support for today's and also forming very strong, very nice levels, reconfirming by December. So And by the way, the previous trading session, it was also working as a actually beginning of the trade. So this could be very strong psychological moment from where we will do the attraction move towards R1. So you can then make the profit. And speaking of profit, we always advise taking profit at our channel at the level of 10 to 15%. So 10% for slowly moving charts, 15 for fastly moving ones. And it's important, really take it, just force yourself to take it. Never sit too long, don't be too greedy, because if you sit too long, you might lose the moment and then you just decline. Imagine for those who didn't sell here in the top by mid of January, now they're declining and taking losses actually. So it's very important to take profit in time and then either re-enter or check other opportunities, because this is how you need to trade. You need to become a trader. So develop this feeling, understanding, making profit. That's the only way. And if you try to bet on one trade to become a millionaire, this is usually a recipe for disaster. And one of the reasons why actually beginners fail in their first year of experience, of trading experience. So with this being said, the small philosophical, let's say, moment. This is the profit target, 10 to 15%. Once you make it, just take it. That's our advice. But of course, you are the boss. You know better what to do. Then what happens if we continue further or we decline immediately? Well, this is also a possibility. Then we just need to be prepared, because this is also part of the strategy we take. We don't bet on immediate jump and then taking losses with the stop loss, but we rather prepare to fight until we make the profit. So we fight until making the profit. That's the final goal. It might cost a little bit of time, but it should not cost you money. So that's our strategy, and that's part of our mixed analysis that we do at our channel for many stocks. And mixed analysis means that we actually place it on 3 pillars. Technical analysis, and pillar is doing non-linear average down based on support resist channels. That's what we do now. And the third one is taken into account on mitigation risks from possible negative, let's say, catalyst. A negative catalyst could be bad news or some reorganization, something happening with the company, because you can never, let's say, predict it, but you can mitigate it with hedging some funds for this. So with this being said, if we do first technical move downwards and really try to find our support in this channel, one between 12.50 to 14, let's write it here as well. Then, of course, you can again enter here between 12.50 to 14 and make a profit in these levels. Again, once the spike is taking place, so once we go north again, the profit, and that's how we also for us assess that our opinion videos are successful or not, is 10 to 15%. This is very important. Again, R1 might work as a very if you want to wait for this or just take profit at 10 to 15, it's up to you. What if negative catalyst comes in? Imagine like some bad news comes, of course, then the price could be really shot downwards. And then we just need to be prepared for really deep. It's not that it's going there, or it's not that we predict it's going there, but just mitigate it, because safety is very important. So you don't want to lose your money at the trade. And then, of course, here is a very clear support line between 11 and 15. You can see it here, and this would be the last level to average down. It's not at all going there by any means from technical perspective, but might go there if very negative catalyst kicks in or a series of negativities comes in. So if you are prepared to average down on those levels, it should be quite safe. So 10.20 to 11 would be the final, actually averaging down here, and then it should again spike back, and on this spike you can only return but make a profit, and the profit target is 10 to 15. So that's the way to trade here. Of other parameters, you can see, of course, RSI is declining again constantly, so it's almost in the oversold area, which creates very positive momentum. MACD wise, we are, let's say, waving on negative levels. So once we have a final move upwards, it also should be a kind of epic return, because we might really return to these levels above R1 and try to form a channel for those who are more like midterm traders. So we might create this, let's say, upcoming channel or kind of triangle channel. So let's call it T1, T2. It will work as a very strong attractor overall, and for midterm traders, of course, somewhere here the price finally should return and then we could make profit there. But if you're a daily trader, and that's what we discussed here, of course you need to catch the wave, and that's what we did. So this is the trading card, numerical one and graphical one, if you more like it. Speaking of how to average down non-linearly, still it's very positive, so no special way to trade. It's just 1-2-2 approach, meaning it's a 5-portion play. What does it mean, 5-portion play at our channel within the mixed analysis theory? It means that the money you would like to play here, you can actually split in 5 portions. Then you can buy with 1 portion in the first level, and then if price you can buy again with 2 portions, so you average down with 2 portions in the second level, and if a negative catalyst kicks in, then you can buy again with 2 portions in the last level. So this way, it is the very strong optimization for profit versus losses. And as I said, it could take longer time to make the profit, but at the end, the philosophy is that you exit with the profit or with the draw. So you don't take losses. And this is a different approach from, let's say, stop loss attitude. You don't want to lose time for your trade. You say, okay, next day I will make the profit, but you take the loss. We propose another approach. We follow actually another approach, and which is you don't spend money, but you spend a bit of time. So it's a little bit different optimization. And the reason for this optimization is that because usually people who watch for YouTube channels who trade like this, these are semi-professionals and they don't have time really look daily on the stocks. Like professionals can take loss. Okay, another hour I will return the money. For those who trade as a, let's say, additional investment, having its extra, let's say, source of investment or diversification of their resources, they of course want to play a more relaxed way and just have this feeling and actually being successful and growing with time, because they don't have this frequency of trading. They could be doing. So that's why we do this mixed analysis technique. And by the way, soon the membership will be announced on our YouTube channel. So there we will discuss more about this mixed technique that we propose, those analysis, and actually the philosophy behind the ideas we provide in our opinion videos. So again, that was a little bit philosophical discussion. Coming back to NGA, that's actually end for it. That's the trading card. You can use it for trading it for next week and coming week. Good luck with it. Also, please don't forget to subscribe to our channel. Time watching. Please press like, subscribe, and get notified. This way you will not miss our new videos and new interesting discussions for US-based stocks.